Investment advisory services are offered through PCM Advisory, LLC, DBA Precision Capital Management, and SEC Registered Investment Advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
And welcome into Navigating Retirement, your resource for a common sense approach to planning for your financial and retirement future, with Rick Durkee providing the guidance and perspective here on the program. Rick, we always appreciate your time.
Hey, good morning, Peter, and good morning to our listeners here on our podcast edition of Navigating Retirement. Hey, wow, roller coaster ride.
Indeed. Yeah, the market's been crazy.
It has, and there's been a lot of fear out there, Peter, and I'd like to talk about that today. I'd like to talk a little bit about how we can make sure that we put into place, if you haven't already, some kind of defensive mechanisms if you're retirement minded and withdrawing out on your portfolio.
Okay. Well, Rick, first, I guess, what do investors need to know about the market and the volatility and the turbulence that we've seen?
Well, first of all, there are some defensive mechanisms already built into the market, Peter. I'll just share with you that on Thursday, the S&P circuit breaks tripped, halting trading for 15 minutes. Those circuit breakers are a mechanism to allow orderly markets in periods of high volume so that there's liquidity in the market so people can get cash if they want to get their money out. And so this avoids a mass hysteria panic, because we know that for every seller in the stock market, there's a buyer, and that liquidity is really important. The trigger levels, just to share with listeners, are that the S&P, if it falls 7% intraday, there's a 15-minute halt. If it falls 13% intraday before 3:25 p.m. Eastern Standard Time, there's a 15-minute halt. And then also the S&P can fall, if it falls 20% intraday, all trading is halted for that day. So there are some defensive mechanisms already built in if you're just a retail investor that's in some indexes or a portfolio of stocks.
And Rick, those safeguards were actually put into effect after the 1987 Black Monday event.
Black Monday.
Monday.
Yeah.
Kind of giving the market a chance to cool down.
Yeah, cool down, and then actually on that in that time frame, it did allow a rebound after that, and so we're kind of seeing that right now, Peter. We're seeing some big lows, and then we're seeing some lower lows, and then we're seeing some combinations that are being called a correction, and we're being told now we're in a bear market. The bull's over, and that it's true. But it depends on what you're using for your measurement tool.
Yeah, because we hear on the news about the S&P 500 or the Dow Jones. We hear about those major market indices, but hardly any investor is just kind of across the board invested in the Dow 100% or the S&P 100%. It's just not a typical way of investing. So what we're seeing on the news actually is probably not reflected in most investors' portfolio, at least not 100%.
Well, I actually have never met an investor, a prospective investor, or do I have a current investor in my portfolio that is invested in those 30 stocks in the Dow, those exact 30 stocks, or the 500 stocks in the S&P 500. People are diversified based on their risk tolerance and also based on their needs of when they want and need to use this money, when they need to have liquidity. So higher risk is placed on assets that are used later. Lower risk is placed on assets that are used now or maybe in the next 2 or 3 years, where we don't have the investment time horizon to withstand these major corrections that we're seeing right now in the market.
Well, again, if you've got questions or concerns, I do encourage you to pick up the phone and give Coastal Financial Planning Group, Rick Durkee, Navigating Retirement, a call. We know the markets are turbulent. They are volatile. It can feel like a very wild ride at times, but you need personal strategies to help manage the risks of the market, but also take advantage of the potential growth that the market offers. And Rick Durkee and his team, they help their clients align your individual risk tolerance with the goals and objectives and managing that risk within your accounts. 800-491-6220, the number to call. That's 800-491-6220. So, Rick, as we've seen this roller coaster that the markets have been on, how do we as investors then manage that risk? And how at Coastal Financial Planning Group do you help your investor clients manage that risk?
Well, I'd like to say this, Peter, that received very few calls over the last 2 weeks from our clients because they understand that we are defensively managed. That was our purpose. That was our goal, was to meet with prospective clients and take them through our 3-step review discovery process where we actually build out an income plan for our clients. We determine their risk. We determine how much risk they want to take on their investments. We determine when and how they're going to need income throughout their retirement years. And then we build out a portfolio for them. It's built on the strategies that you and I have discussed for years called income allocation. We make sure that we have our income needs covered, and then we invest the rest. It's as simple as that. So, and then with the money that we invest, if you're retirement minded, the rest of the money that we invest, we determine when that money is going to be used, and we determine how much risk we can take. If it's going to be used in the near future, we're going to have less risk. If it's going to be used down the road or maybe never, we're going to have more risk because we can withstand losses in that money and we can let it grow back during the time that it takes for it to grow back. So we've been very fortunate that there have been, rightly so, a good number of people that have listened to our radio programs over the year and take heed of our planning process and the 3-step review. And so we've got a great client base, and we have them defensively managed. And whereas you might have seen a 30% drop in the Dow this week due to the COVID fear and also oil prices lowering, you know, we in our portfolios, we traded out on March 2nd to safer investments, defensive management for our core investment portfolio. And so our clients saw nothing like the Dow, but nobody's in the Dow.
Yeah.
So,
Rick, there's a process there to begin with where clients at Coastal Financial Planning Group go through a process to make sure that they are properly aligned and adjusted for their risk tolerance. And I know on an ongoing basis in normal market conditions, you're taking the steps to rebalance and readjust. But it sounds like under more stressful market conditions, you also took some steps, or there were some steps and actions taken to further help to mitigate and adjust for that risk.
Yes, we have discretionary trading authority on our investment accounts for our clients. So, and when I say we're investment advisor representatives for Fusion Capital Management, which is a registered investment advisor that purchases investment advice from institutional investors that have models that have defensive mechanisms already built into them. These institutional managers will manage large pension funds. Pension funds we know can't run out of money. If we do have that problem, then we're going to have a lot of angry pensioners, right? So we have the institutional managers that are doing those trades on a large scale, multi-billion dollars of money that they manage. And so they have the defensive mechanisms built into their trading signals and whatnot. And then once those fire, then those also go through our custodian and automatically are traded for our clients at the same time. So, you know, when you see the volatility in the market, that was probably a lot of the institutional managers' risk triggers firing. And so, you know, a lot of things are automated today, automated trading desks and things like that. You know, there's a lot of computer-driven. Artificial intelligence is even used in the investment world today. So there's a lot of computer-driven trades. Those happen in milliseconds, And that's where we see a lot of the volatility now. But I do want to say this, Peter, the one thing that we did let our clients know about last summer when we did our annual retirement planning summit and we brought in those institutional investors is they said, hold on to your hats. 2020 is going to be super volatile. You think 2019 was bad? 2020 is going to be bad. But they just didn't know why,
Yep.
Well, they did know why. They knew that we were going into election year. They knew that there was some uncertainty with that, but they didn't know we were going to have a black swan event called COVID-19.
Yeah. Well, we also knew, Rick, that we had been on a historically long bull market run and we're probably overdue for some type of correction. But it's funny, all during the year of 2019, I was hearing people very worried, very concerned, the news pundits, the talking heads saying this is going to be the year when we see volatility. We're overdue. There's going to be a correction. There's going to be a bear market. Something is going to happen. And then right towards the end of 2019, I started hearing the opposite and people saying, oh no, this bull market still has plenty of legs. It's going to run throughout 20.
January was a great month, wasn't it?
Yeah. Yeah.
It was.
It's funny how quick it turns, and then how sometimes we hear the misinformation, the opposite of what we need to be doing or thinking about, and these predictions that no one has any idea if they're going to come true or not.
Yes, Peter. If we have a plan that's built on facts, if it's built on a plan that looks at a process of discovery where you determine how much will this financial decision affect me from an income tax planning standpoint, from an income planning standpoint, how much of this money do I need and when? And then thirdly, how will it affect me from a risk standpoint? How long will this money last? What's my longevity risk question? How that's going to be answered. Number two, how about my market risk? How much market risk can I withstand? And then number three, what about my withdrawal rate risk? How fast should I take this money out of this portfolio to be able to make sure that it doesn't run out because I'm going to live long? All those decisions are walked through in a very formal process that we fine-tuned at the Coastal Financial Planning Group. We've actually even had it certified by the International Standards Organization, and we're accredited and audited on that process by the International Standards Organization every year. So we need to make sure that our process is in place so that we can create procedural trust for our clients and they know that we're going to manage their money in their best interest during times like we're in right now.
Well, again, if you've got questions or concerns, if you would like to get that plan put together or review and update your plan or your accounts and investments, pick up the phone, give Coastal Financial Planning Group a call, 800-491-6220. That's 800-491-6220. Rick, I think a couple things are probably pretty apparent here is that proper balance is needed, and really the plan is what brings us confidence even during times of market volatility and turbulence.
Yes, Peter. And if we know that we have that plan in place before bad things happen,
right? That's the
then
key.
we have confidence. Okay. Yeah. If it's now and you're saying, oh, I didn't do that. I
sure need a plan.
Yeah. I didn't ask my advisor what happens if the market drops down 20, 30%? Do I have a fail-safe mechanism in place to get me out of harm's way? Is my income still going to be right? If you didn't have those discussions, the last review that you sat down with your financial advisor and you didn't talk about these things to make sure that you are safeguarded, then I suggest that you find someone that can do that. And at the Coastal Financial Planning Group, we've done that successfully for almost 15 years now as the Coastal Financial Planning Group. I've been in the investment advisory world for about 25 years now. And my mission is to help people that need my help. If you need my help, call me today at 800-491-6220. Be happy to help.
Yeah, that could certainly be pretty scary times, Rick, going through that kind of market turbulence, seeing more than 3 years worth of gains in progress erased in just 2 weeks, seeing a 20% or more correction on the news every time we're looking, major market movements. That really could be scary, but having that plan in place is what allows us some stability and confidence to maintain our sanity through those times. And if we have not adjusted, if we have not revisited that plan, Rick, if we've not had reviews and done rebalancing, we're probably overweighted in risk, especially with all of the gains that we saw leading up to the market volatility as a result of the COVID-19 and the coronavirus.
Well, it's unfortunate, but that stock market is driven by two very heavy emotions, Peter. One is fear and the other is greed.
Yep.
And we saw the greedy investor even hanging in there to the last minute in January. And now we see the fear trigger going off, and people are having knee-jerk reactions, and they're calling up and not here, but they're calling up their broker and saying, hey, what do we got? What's going to save me here? But the big reason is because a lot of you people out there listening right now were people that are retirement minded, and you're getting ready to retire.
I was
and
about
now
to say,
you can't.
Yeah.
And now you can't.
Well, Rick, we've been told we can't time the market, but for anyone on the doorstep of retirement here, this is especially impactful, and they may not be greedy or fearful necessarily leading up to that, but certainly when you're looking at trying to get ready, you want to sort of get every last dollar that you can out of the market before you retire. This kind of event is exactly why we can't be overexposed to risk, and we need to take steps well in advance to protect some of those assets and begin to set up the building blocks for that retirement.
Absolutely. It's a simple 3-step review process. I encourage you to call us today at 800-491-6220 and get on the way to starting to protect your retirement plan, protect your retirement assets from future black swans like the COVID-19 virus. And we do have this special message that I'd like to send out to everybody. I understand your concerns. I pray that you and your loved ones are safe and secure during these times, and that this virus doesn't affect your family or friends during the next 3 to 7 months, as we've been told that this may be affecting us.
Yeah. Well, we know we are going to continue to see regular market cycles. We know that we will see market downturns. We know also that from time to time there will be black swan events. We've seen it in the past. We're in the midst of it now, and we're certainly going to continue to see those things happen into the future. That's why you have to have a plan. That's why you need to continually monitor that plan. And that's why it absolutely is beneficial to have a relationship with a qualified advisor, a professional to help you make sure you're on top of that plan. And the plan is working through all conditions to help you achieve your goals. Pick up the phone, give Coastal Financial Planning Group a call, 800-491-6220. That's 800-491-6220. Rick, any final thoughts?
Hey, just thinking about this, if we've got a 20 to 30 year span of life ahead of us in retirement, this is going to happen again. It might be a new virus. It might be some other black swan event. Make sure that you protect yourself against these potential drawdowns in your portfolio, and make sure that your income is straight and secure and going to provide for you and your loved ones during times like this, so that you don't have to worry about market performance paying your bills.
Once again, Rick Durkee, president of the Coastal Financial Planning Group, Charleston and the Low Country's resource for a common sense approach to planning. If you are at all nervous, apprehensive about what's going on in the market, if you don't have a plan or haven't reviewed and updated your plan in some time, pick up the phone, give a call. They do offer a complimentary review, that 3-step financial and retirement planning review process and strategy session. 800-491-6220, 800-491-6220. You can also visit online, cfpgroup.biz. Lots of great additional resources and information available there. And we always encourage you to please subscribe to this podcast on your favorite player. We're available on all of them. The Navigating Retirement Podcast with Rick Durkee. And Rick, we always appreciate your time and your guidance and perspective, bringing some common sense to what seems to be a pretty crazy financial and economic world.
And thank you to all our listeners out there in the Low Country and worldwide now on our podcast. We look forward to having you on a future edition of Navigating Retirement.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Investment advisory services are offered through PCM Advisory, LLC, DBA Precision Capital Management, and SEC Registered Investment Advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for asset under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.